Brian, good to have you. You've called Apple the best tech company on the planet. Look at these results, blowing away estimates. What can you say about these numbers?
Sure, it was a great result. Good quarter all around. Basically about $1 billion of revenue upside to consensus for the June quarter. And I would highlight that the strength really came from the iPhone as well as the Mac numbers. And the most interesting part about that is part of the bear thesis is that the new ramping iPad would cannibalize, if you will, sales of the iPhone and the Macs. And we simply didn't see that. So net, very solid quarter all around. Good results.
Okay, good results. What about Antenna Gate? You know, obviously it's been some bad PR for Apple, and Steve Jobs has had to fight back here. But we have seen the shares react sort of to it, Antenna Gate. But we still have Apple on the conference call saying they are selling every iPhone 4 that they're making.
Sure. Yeah, I think that was kind of blown out of proportion by the media. I mean, clearly when you're in the lead, the only place to put a target is on your back. And so people put a target on Apple's back, and they're taking shots. At the end of the day, I think the numbers speak for themselves. Well less than 1%. In fact, it was about half of 1% of all iPhone 4 users called in and complained about any reception. Myself, for example, my iPhone 4 has been much better reception than the old iPhone, and pretty much everybody that I talk to that has an iPhone 4 has had the same experience. So, you know, I think this is going to blow over here pretty quickly. I think the numbers are going to really step to the forefront here. And again, I think the stock's headed higher. You know, I think we have about a 50% return over the next 12 months based upon my $370 price target. So, you know, Apple is trading roughly at a market multiple, which I think is extremely attractive here.
Yeah, you're looking at a buy rating on the shares. 370 is your price target. That beats the average analyst price target tracked by Bloomberg. They're calling for 320, but at 20 times multiples, you think that's still a bargain for Apple?
Well, I think, as you pointed out, the best technology company on the planet, this is a company that's going to have $75, $80 billion in revenue next year and probably growing next year 20% plus on the top line. So, you know, for that type of attractive opportunity, I think you have to pay a premium to the market multiple. You know, currently the S&P is trading around 13 times, and actually that's the same multiple that the market is applying to my numbers for Apple next year. And so I do think that's pretty attractive, given the fact that they still only have about 5% unit share of the global handset space as well as the global PC space. So in my mind, there isn't any reason why they can't double their unit share over the next several years. And if that happens, I think their earnings per share is going to increase pretty dramatically. And so I think there's a tremendous amount of upside.
Brian, talk to me about guidance, because a lot of analysts were snickering at the guidance from Apple, because usually they bring out these very conservative numbers and then overextend and way beat the results. So are you thinking that that's the case for next quarter?
Well, let's take a look at what happened in March. So last quarter, they beat consensus expectations by about $1.5 billion. This most recent quarter that they just reported for June, they beat consensus by about $1 billion. So they guided to $18 billion for September, which was about $500 million higher than my number, and my number was about $1 billion higher than consensus. So I think guidance at face value is very impressive. Having said that, Apple does guide, as you point out, very conservatively. So I think there's probably even some upside to that number as well. So I think the outlook here on Apple, basically the management signaling a very, very bright outlook.
Okay, Brian, nice talking to you. Thanks for those insights. Brian Marshall of Gleacher Co.